All right, so we are diving in.
To Warren Buffett?
Yeah, to Warren Buffett.
Yes.
You tip me a ton of stuff about his investment strategies.
Right.
Where to put $1,000 right now.
Uh-huh.
And the Motley Fool, that's where this deep dive is coming from.
Very reputable in the world of finance.
Definitely.
Yeah.
So we're looking into Amazon, American Express,
Right.
and Berkshire Hathaway itself.
People always wonder about that last one, but
Yeah.
it really does follow kind of his overarching investing philosophy. We'll see.
Okay, color me instinct. Let's start with Amazon.
Okay.
I mean, who doesn't use Amazon these days?
Right.
But is it still a good investment in 2025?
Yeah.
Especially with that stock dip?
The Motley Fool thinks so.
Okay.
Yeah. Their analysis highlights that despite that early 2025 kind of jitteriness, Amazon e-commerce sales still grew 10% during the last holiday season.
Okay.
Which is...
That's huge.
It's pretty impressive.
Yeah, 10% on top of what they're already doing.
Exactly.
But it did say weak guidance for the first quarter, right?
Yeah, but...
Didn't the article say that?
It did mention that, but here's the thing.
Okay.
The Motley Fool is really playing the long game here.
Right.
They're pointing out that e-commerce still represents only about 16% of total retail sales in the U.S.
Okay.
And in that market, Amazon is the king.
Yeah, for sure.
Leaving the competition in the dust.
Okay, so there's definitely room to grow on the e-commerce side.
Right.
But what about this whole AWS thing?
Yes.
Amazon Web Services.
That's where it gets really fascinating.
Okay.
That is a profit machine.
I mean, I know it's cloud computing.
Right.
But like...
Growth rates nearly twice that of Amazon's e-commerce business.
Wow.
Even more impressive is that it generates half of Amazon's operating income.
Wait, hold on.
Yeah.
Half the operating income from a business that's only 15% of the revenue?
That's right.
That doesn't what?
That's the power of AWS.
Oh, okay.
So CEO Andy Jassy has been laser focused on efficiency, and it's translating into major profits for AWS.
Gotcha.
And this is likely just the tip of the iceberg.
Okay.
The Motley Fool cited projections that the entire cloud computing market could triple in size by 2032.
Wow.
So if you're looking at Amazon as a long-term investment,
Right.
that AWS is a major factor.
Okay, I'm starting to see why the Motley Fool is so bullish on Amazon, even with that early dip this year.
Right.
Okay, so let's move on to American Express.
Okay.
I'll be honest, I think of credit cards,
Yeah.
not must-have investment.
Sure.
What am I missing?
Well, American Express is much more than just a credit card company.
Okay.
It's a powerful brand
Okay.
with a very strategic approach.
Gotcha.
It's now Berkshire Hathaway's second largest investment,
Okay.
surpassing even Bank of America.
Really?
Yeah.
Bigger than Bank of America?
Uh-huh.
Wow. What's driving that?
Buffett clearly sees something in Amex.
Yeah.
Despite concerns about consumer spending, their loan portfolio still expanded 10% year over year in the most recent quarter.
Okay.
And here's the key. They achieved this growth without taking on excessive risk.
Okay.
Their charge-off rate, the percentage of loans they have to write off as bad debt, is remarkably low.
Okay.
About a third of what you see with a company like Capital One.
That's impressive. How do they keep those charge-offs so low
Well,
while also growing their loan portfolio?
they focus on a specific demographic.
Okay.
They call them mass-affluent.
Okay.
Particularly younger generation.
Okay.
And just so we're all clear, mass-affluent
Right.
refers to individuals and households who have a high level of disposable income and typically excellent credit.
Gotcha.
So this group has significant spending power,
Right.
much less likely to default on loans.
Makes sense.
Yeah.
So they're playing it smart by targeting a customer base that is both reliable and has money to spend.
Right.
But what else makes them stand out from other credit card companies?
Well,
I mean, there's a lot.
there are a lot.
Yeah.
Unlike many credit card companies that primarily rely on interest income,
Okay.
Amex generates revenue from both interest charges
Uh-huh.
and swipe fees.
Okay.
This two-pronged approach makes them more resilient to economic swings.
Makes sense.
So, for instance, even if interest rates fall,
Yeah.
and there are predictions that they might,
Okay.
Amex can still rely on its swipe fee revenue.
So they're not putting all their eggs in one basket.
Exactly.
Okay. The article also mentioned falling interest rates, lower corporate taxes, potential deregulation.
Right.
Could those significantly boost Amex's future?
Absolutely. All potential tailwinds that could benefit American Express enormously in the coming years.
Okay, so we've got Amazon with its just dominant e-commerce platform,
Right.
rapidly growing cloud computing business, AWS,
Yes.
both pointing towards significant growth potential.
Uh-huh.
And then there's American Express, which seems to be playing a very savvy, calculated game
Right.
with its customer base and its revenue.
Yes.
Both sound pretty promising.
They certainly do. But don't forget, we still have one more contender to explore.
Oh, right.
Berkshire Hathaway itself.
That one always gets me. It's a little too meta for me.
It is a bit meta, isn't it?
Yeah.
But there's a method to the madness.
Okay.
It's not just about owning a piece of Berkshire's successful businesses.
Okay.
It's about their incredible cash reserves.
Okay.
At the time of the article, they had a whopping $325 billion in cash on hand.
That's a crazy amount of money.
It's a lot of money.
What do they do with all that cash?
Well, for starters, it's earning them over $10 billion annually in interest alone.
Wow.
Yeah.
So even if they just let it sit there, they're making a fortune.
That's right.
I'm guessing there's more to it, though, right?
You're absolutely right.
Okay.
That massive cash pile gives Berkshire incredible flexibility.
Okay.
They can use it to scoop up bargains if the market takes a dip, buy back their own shares, or make strategic acquisitions.
Yeah.
It's a huge safety net and a powerful tool for future growth.
So investing in Berkshire Hathaway is like betting on Warren Buffett's ability to allocate that cash wisely?
You got it.
It's like investing in his expertise.
That's a great way to put it.
And, I mean, his track record speaks for itself.
It certainly does.
But before we get too deep into Berkshire Hathaway,
Yeah.
let's switch gears and look at how all of this information applies to you.
Okay.
And that $1,000 you're looking to invest?
Sounds like a plan.
Yeah. What are the key things to consider when deciding where to put that money?
That's what we'll unpack next. Stay with us.
All right, so we've covered 3 investment opportunities inspired by Warren Buffett's own portfolio.
Right.
But let's bring it back down to you, the listener.
Yes.
You know, you're thinking, okay, that's all fascinating.
Uh-huh.
But what does it mean for my $1,000?
That's the $1 million question.
Right.
Or the $1,000 question, I guess.
Exactly.
It boils down to your own investment goals and risk tolerance.
Yeah, everyone's different, right?
Exactly.
Yeah.
Someone who's looking for rapid growth might be more drawn to Amazon with its potential for disruption.
Uh-huh.
You know, expansion in e-commerce and cloud computing.
Right.
They're willing to accept a little more volatility for the chance of higher returns.
But for someone who prioritizes stability and steady growth, Amazon's roller coaster ride might be a little too much?
Right, precisely.
Right.
That's where a company like American Express, with its established brand, targeted customer base, and diverse revenue streams, could be a better fit.
Yeah.
They're playing a long game, focused on steady, reliable growth.
Okay, and then, of course, there's the dividend option of investing in Berkshire Hathaway.
Yes.
It's like diversifying your portfolio by proxy.
Uh-huh.
Getting a little piece of everything Buffett touches.
Exactly.
Plus that huge cash stockpile.
You got it.
Acting as a safety net.
It's definitely an intriguing strategy for someone who believes in Buffett's long-term vision and ability to navigate market fluctuations.
Right.
But even within Berkshire Hathaway's vast portfolio, there are varying levels of risk and potential return.
So how do you even begin to make sense of this information and figure out which path aligns best with your $1,000?
Well, a great starting point is to assess your own risk tolerance.
Yeah.
There are a lot of resources available online, including some great tools from the Motley Fool that can help you determine your comfort level with risk.
Yeah, you got to be honest with yourself about how much risk you can handle.
For sure.
Are you okay with your investment taking a dip?
Uh-huh.
You know, if it means higher returns later?
Exactly.
Or do you need something predictable and stable?
Yeah. Once you have a clear picture of your risk tolerance, you can start to look at your investment goals.
Okay.
What are you hoping to achieve with this $1,000?
Right.
Are you investing for the long term, like retirement?
Uh-huh.
Or do you have a shorter term goal in mind?
Yeah, if you're investing for retirement, you might be more okay with risk.
Right.
Because you have time to ride out those market fluctuations.
Exactly.
But if you need that money in a few years, you might want something less volatile.
For sure, your time horizon is a crucial role.
Right.
And don't forget, you don't have to put all your eggs in one basket. You can split that $9,000 between 2 of these companies.
Right.
Or even all 3 to create a mini portfolio that kind of reflects your risk tolerance and investment goals.
Diversification is key.
It is.
Even with $1,000.
Yeah.
Good point.
And while we've focused on these 3 specific companies, I think it's important to remember that we've only scratched the surface of Berkshire Hathaway's vast holdings.
Yeah, there's a whole universe of other companies within Berkshire Hathaway's portfolio.
Exactly. Who knows, there might be a hidden gem tucked away in there. That's perfect for your $1,000 and your specific investment goals.
Yeah.
That's why it's so important to do your research, explore those holdings.
Yeah.
See what speaks to you.
It's a treasure hunt.
It is.
But instead of digging for gold, you're digging for companies.
Right.
With the potential to grow your wealth.
Exactly. And remember, investing is a journey, not a destination.
Yeah.
It's about learning, exploring, making informed decisions that align with your financial goals.
Right.
So take your time, do your research, and don't be afraid to ask questions.
Okay, listener, I hope you're feeling empowered. to take control of your $1,000
Yes.
and start exploring this exciting world of investing.
It is exciting.
Before we wrap up this deep dive, I want to leave you with a final thought.
Okay.
If you had to pick one company from Berkshire Hathaway's entire portfolio
Wow.
to invest your $1,000 in, which would it be and why?
That's a great question.
Right.
It really challenges you to think critically about everything we've discussed.
Yeah, what are your priorities?
Exactly.
Growth potential,
Right.
stability,
Right.
a specific industry you believe in.
It's not an easy decision,
Yeah.
but that's what makes investing so fascinating.
Right?
You're not just putting money somewhere.
Yeah.
You're making a choice, a bet on the future of a company and your own financial future.
Exactly. So take some time, explore those holdings, delve into the businesses, and see what really speaks to you.
Right.
Yeah, what sparks your curiosity.
What aligns with your vision.
Yeah, you might be surprised by what you discover.
Absolutely.
This deep dive has been a great starting point, but now it's time to put on your investor hat.
Yes.
And do some digging.
That's right.
Maybe that $1,000 is just the beginning of building an incredible investment portfolio.
That's the beauty of it. Investing is accessible to everyone.
Right.
And even a small amount, like $1,000, can be the seed that grows into something much larger over time.
So don't underestimate the power of that $1,000.
Right.
It's not just money, it's potential waiting to be unlocked.
That's right.
And remember, we're always here to help you, guide you through the world of investing.
Absolutely.
And make sense of this financial landscape.
Keep sending us your deep dive requests.
Yeah.
We love exploring new topics.
Yeah.
And helping you navigate this ever-changing world of finance.
All right, listener, it's time to take the reins.
Yes.
Embark on your own investment adventure. And remember, the best investments are the ones that you make with confidence and a clear understanding of your own financial goals.
Absolutely.
I think we've given everyone listening a really solid base for, for understanding how to approach these decisions.
Right. We've explored those key insights into Warren Buffett's investment philosophy and kind of highlighted how those principles can apply even to a smaller investment like $1,000.
Yeah, exactly. You don't have to be some Wall Street hotshot to make smart investment choices.
Exactly.
It's all about, finding companies you believe in, doing your research, understanding your risk tolerance, your financial goals.
And don't let all the jargon scare you away.
Yeah.
At the end of the day, investing is about participating in the growth and success of businesses that you find interesting or valuable.
Yeah, it should be fun.
Right.
It shouldn't feel like a chore.
It is exciting.
Yeah, to be a part of something bigger than yourself. Even in a small way.
And who knows that $1,000 could be the start of something truly amazing.
Absolutely. So, as we wrap up this deep dive,
I
want to encourage you to keep learning.
Yes.
Keep exploring.
For sure.
Keep that sense of curiosity alive.
Right.
The world of investing is constantly evolving.
It is.
There's always something new to discover.
Absolutely. And remember, we're always here to help guide you along the way.
Definitely keep those deep dive requests coming.
We love getting them.
We love diving into these topics, breaking down complex information.
Right.
Making it clear and actionable.
Until next time, happy investing.
And happy learning.